Hi, I'm Erin Eicher, and today I'm going to talk to you about the biggest mistakes that I see buyers making in today's market. Everyone is talking about 7% interest rates, but we are seeing savvy buyers in La Plata County effectively get rates in the fives. And today I'm going to break down the buy right blueprint, which is the exact strategy we use at CPG to make sure that our buyers and our clients can make a decision in a market that feels frozen to everybody else. First and foremost, let's talk about down payments and seller concessions. Most people don't know that you can actually get into a home with as little as down and sometimes as low as zero. You just have to know which organizations and entities you can partner with to find those products. So if you're sitting there thinking, I have to save 20% before I can actually go buy a house, there's a couple of problems with that. One, you're chasing a balance in your bank account at the exact same time that property values are going up. So your target is constantly moving higher and higher, the more your monthly payment is going to be. So not only are you chasing a down payment, you're also chasing your own budget. But we have a solution for that, and it is in the form of seller concessions effectively used as rate buydowns. You may have heard of the 2-1 buydown or the 3-2-1 buydown, but let me tell you exactly how this works. So if you are a buyer purchasing a property and you think maybe you want to ask for the price to be a little bit less because you think it's too high, an alternative would be to ask for a seller concession. A seller concession is going to be a credit from the seller to you as the buyer at closing. And this concession can be used for all sorts of things: closing costs, other items that you had to prepay. But most effectively, it can actually be used to prepay interest and buy down your mortgage rate. And the catch is you're prepaying interest, but at a much lesser rate. That's how amortization works. And that's probably a whole different video. So if you choose, let's say in the scenario in Durango, ask a seller for a $15,000 seller concession as opposed to reducing the purchase price by $15,000, here's the math. A price reduction of $15,000 would save you in the neighborhood of $90 a month. But a $15,000 seller concession used for a 2-1 rate buydown likely saves you hundreds of dollars a month. So your cash flow monthly is going to be much, much better, and you're saving money on interest. I want to talk to you about the power of hunting for days on market. Now, this might seem a little contrary because we are so excited when a new home hits the market and it checks all your boxes. It's got that great backyard, it's got a view of the mountains, somewhere that you can imagine yourself calling home. However, that seller who's brand new to the market is way less likely to negotiate with you than the seller that's been on the market, let's say 45 days. We use approach with our buyers where we're actually looking for homes that have been on the market a little bit longer than their competition because we know that that seller is probably a lot more willing to talk about price than the one that just came on the market today. Next, let's talk about the Wellness and Efficiency Audit and the hidden costs of homeownership, which are so important to pay attention to. If you're trying to find the right home, you need to make sure that you're comparing apples to apples in your own long-term wealth strategy. And as insurance rates and utilities and HOA costs are all part of your monthly picture of home ownership, when you're looking for a home, you can't just look at purchase price. You have to look at not only the purchase price and what that means for you as far as a mortgage payment, but also what is my property insurance going to cost me? How much are property taxes? And not all neighborhoods in La Plata County are created equal. Some have higher property taxes than others. Some have higher HOA fees than others. And maybe they include more than the lower HOA fee. And then there's utilities, right? Is older home with older windows going to be less expensive for you in the long run than a newer home that was built high efficiency? The answer is likely no. Although in the short term, we might just look at the sticker price and our monthly payment. Once you add in things like utilities and electricity and gas bills, all of a sudden you can find that maybe the newer house was a better decision. So we like to do a pre-offer audit. That means we're not just looking at the purchase price of the home as it relates to comparable properties that have sold. We're looking at that home and we're going to tally up all of the other expenses that you're going to be expected to pay if you buy that home. And sometimes we find surprises that tell us this isn't the right home for us. And maybe we find things that say, you know what, this is the right home and we can afford all of it. And you are going in eyes wide open. That is what's most important to us. Here at CPG, we want to be a resource and not a sales pitch. If you're tired of the headlines and tired of wondering whether or not this is the right time, we're here as the local truth. So reach out to us and you can receive a copy of our buyer strategy guide for 2026. We take care of the strategy so you can just take care of getting ready to move into your new home.